Yesterday, we looked at the heart of a college, its culture, its students, its programs, its faculty. But today, we're looking at the numbers. Because let's be honest, college is very expensive and it is a big investment. And every smart investor looks at the data. Welcome to Day 7 of the College List Challenge. My name is Mosley, and welcome to Mo Advise. Today, we're going to be talking about the quantitative side of the college research. The numbers that tell the story behind those pretty brochures you get in the mail or what you see online. Let's start with graduation rates. Are students really finishing and graduating from this school? One of the biggest red flags that I pay attention to when I advise my students is a low college graduation rate. Always look at the 4-year and 6-year graduation rate of a college. Always ask how many students actually finish on time, meaning 4 years, really. And why does this matter? Because every extra year in school is equal to more debt and equal to loss of income. Look at you want a strong college with a very high 4-year rate, because that tells us that they have the support and the strong academics and really good advising to help the students actually finish. You can find this information on a college scorecard as well as the common data set and the college's website. Let's look at the second section. We have to look at the employability and the outcomes. What happens after a student graduates? We need to look at the percent of students employed or the percent of students who go into graduate school within 6 months after graduation. We need to look at the average salary after graduation. What are alumni doing after 5 years, 10 years, 20 years later? These are very important numbers that we need to look into. Tools that you can use to find this information. The alumni tool on LinkedIn. Every institution provides a report, and it's called the Institutional Outcomes Report. And also the college scorecard also tells you the graduation rates. Let's go to return on investment, which is part 3. Think of return on investment as, what will I get back for the time, energy, and money that I put into this school? What are you looking at? The median earnings 10 years after you enter college. You're looking at earnings versus debt to ratio. You're looking at the cost of attendance. Some colleges, even though they have a higher cost of attendance, they still have a better return on investment because they offer generous financial aid and scholarships. And usually that equates to having a better outcome. Look for a college, look for a degree, a program that's going to give you a higher return on investment. Where you can look at that, where you can look at a university that provides you with their IOR return on investment rankings, you can go again to the college scorecard. And also you can try the Georgetown University. They have a center on education in the workforce, and they have ranked ROIs for over 4,500 universities and colleges in the United States. Again, this is Georgetown University, and this is in their Center on Education in the Workforce. Let's move on. Let's look at endowment and institutional wealth. The endowment is how financially healthy is a college. Why does this matter? Because more funding equals more scholarships for their students, better facilities, stronger career services, alumni services. The higher the endowment, the better stable and financially healthy a school is. Underfunded schools may tend to struggle, and it may be a little bit harder to support their students and survive in the long term. Always compare the endowment of a university. Look at the endowment per student, not just total dollars that they spend on each student. For example, Harvard has a huge endowment, Princeton has a huge endowment, and they give out full ride options for low income students or students who make under 75,000 or under 200,000, right? Smaller schools with high endowment per student equals more personalized resources. Where can you find this information? Nakubo is one website. They provide reports and they give out the endowments for each universities. The school website also, the institutional report that we talked about earlier, gives information about that. Also, the College Navigator, which is another Department of Ed database that they offer. They also offer information about endowments of a college. So let's jump into the challenge of the day. Always run your numbers. I want you to pick 3 more colleges, right, and put them on your list and do the research. You're doing quantitative research this time. You're looking at 4-year and 6-year graduation rates. You're looking at the postgraduate outcomes, meaning employment. Did they go to grad school? Did they get a job? What are their salaries? After 5 years, 10 years, 20 years, you're looking at ROIs. You're looking at the earnings versus the cost of attendance. And you're also looking at the endowment of these 3 colleges. You're looking at the total and you're looking at the per student costs that they offer or that they put towards their students. You know, you're not just applying to college. You are investing in your future. So you have to know your numbers. You have to run your numbers. You have to ask these hard questions, right? And you have to demand real outcomes because this is your time, this is your energy, and this is your money. So thank you for spending the time with me. I'll see you tomorrow. I might go live tomorrow to see if there's any Q&As or any questions that you guys may have. I'll let you guys know. So thanks again. And 1 week has been completed. Congratulations and keep on going. Take care.